Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's October 12th, and it's about 8:16 in the morning. The market's going to open up in about an hour and 14 minutes to be specific with you. Before I begin, I want to thank each and every one of you for liking this channel on YouTube, subscribing to this channel on YouTube, and most importantly, posting comments below these videos. I respond, check on them, and read each and every one of them. So please, please, please keep doing it, and thank you so much. Now let's get into today's session. Now, as you can see here, the Dow Jones is up about 146, Nasdaq's up about 100 or 98. We've got big data coming out. First of all, you've got the PPI coming out in about 13 minutes, and don't look at the month over month. It doesn't mean anything. Look at X food and energy year over year. This is the number you want to look at, and PPI year over year, food and energy. I'm hoping that this number keeps going lower. That may show that inflation has peaked on a wholesale level, and that will give us a hope that tomorrow's CPI is going to be better. But the expectation is 8.4, and X food and energy doesn't even tell us what the previous was, but I'm assuming if it's below 8.1, it's good to go. Anything below 8.1 and below 8.7, I'm hoping it's below 8.4. So that's coming out in a few minutes. Then you've got FOMC minutes coming out at 2 o'clock. That'll give us some ideas of what the Fed has been thinking. It's not like they've been keeping it, really, it's not like they've been keeping us a big mystery of what they're going to be doing. I mean, they've been, that Powell can't keep his mouth shut. Pain, transitory, he's all over the place. Then we've got CPI coming out. That's a report that's coming out on Thursday, tomorrow, and that's going to be the last big report. Well, you got retail sales, but that's going to be the last big report before the Fed makes an announcement. So last week's job report and the CPI and the PPI together, that's what we've got to look forward to. And as we stand right now, we're still looking at 0.75 of a basis point. And I'll talk about the CPI before we get into it tomorrow, in my morning video tomorrow, but the PPI is happening, and you'll probably see the results of this report before you even see the video this morning. Now, talking about the market, we are a little higher. Volatility looks like it's peaking out. We're right where we were last time around. Put the call ratio still near 100. We still have not backed out, so there's way too much. There's a lot of ammunition to the upside taking this market higher. Sector watch, as I've showed you guys, we are now, for the first time, let's see if we're still there. Yesterday, the first time that we were not fragmented anymore, where consumer discretionary, technology, and communication services have finally have come together. Now that does not happen. That has not happened in quite some time. And also, you have pretty good sector direction or positioning here as well. The bottom line is, typically when markets get out of whack, up or down, fragmentation occurs. When they get back, consolidation, tightness, they move back in line, and they're right now back in line, and that's telling me the market can make a pretty good move. Now, momentum levels to the downside, I know we've been going down, but momentum levels to the downside haven't been all that strong. We're going about 223 stocks making 20-day breakdowns. You can, on a real big move, you would see about 600-700. Now, I know the ratio of upside to downside is really big, but you're only looking at 223 stocks. So this is not a major down move yesterday at all. As a matter of fact, momentum levels have been fairly steady. Let's talk a little bit about global economy, and then I'll talk about what we should expect today, some levels, and some hot stocks. Remember, it's Wednesday. And what do I do Wednesday? Actionable trading ideas, long and short. So fear of recession has been waiting on markets as stubbornly hot inflation leads consumer to temper spending. We'll see that in the next couple of days. We got retail sales on Friday. And you've got a lot of earnings starting tomorrow. BlackRock, Commercial, Metals, Delta, Fastenal, Progressive, Taiwan Semiconductor, Wall Street, Walgreens. There's a lot of stuff on the table, all right? A lot of stuff on the table. The Fed will release minutes from its last meeting later Wednesday, possibly giving Wall Street more insight into its views on inflation and next steps. Investors and economists still expect the Fed to raise its overnight rate by 0.75 percentage point next month. That's the fourth such increase. Now, let's continue. The government will also release its report on wholesale price. That's the PPI. That's what I was just talking about, providing an update on how inflation is hitting businesses. A closely watched report on consumer prices, that's the CPI, is due on Thursday, and retail sales data is on Friday. Now, retail sales is a huge report because retail sales makes 2/3 of the economy, but I don't think it's going to have a lot of ammunition because it's following the CPI and the PPI, which will really give us a good idea of where we stand. So corporate earnings season begins this week with quarterly reports from Pepsi, Delta, Domino's, Citigroup, Chase. Oh yeah. Pepsi-Cola reports today its outlook for the year with higher prices pushing up sales in its third quarter by 9%. Average price at the drink and snack maker rose 17%. So it's some positive news from consumer staples. British pound weakened against the US dollar after the government of Bank of England confirmed the bank will not extend beyond Friday an emergency debt buying plan to introduce last month to stabilize markets. Very, very interesting indeed. Japan yen declined to a 24-year low against the US dollar. Wow. To a 146 yen level, raising expectations of an intervention to prop up the yen following one such move in September. The world, and that's what I've been seeing, world economy, Japan, England, China really suffering, pushing US down. The weaker yen prices cost for both consumers and businesses who rely on import of food, fuel, and other needs, but bigger purchasing power for foreign currencies is expected to boost tourism. So hoping things are on the up and up. Now, if we look at the SPY, which we will look at right now, you will see that we're still kind of right at the low of that level. And the question is, are we going to break this or not? In the old days, and this is important, pay attention, in the old days, when you would have a double bottom, and this is what it looks like, the second high would be above the first high. With Algo starting to move in, the second highs have been lower than the first highs. And because Algos have been pushing funds to stop traders out and then moving higher. So one of the biggest fundamental differences we see, I say fundamental differences, but it's a fundamental difference in technical analysis, is the fact that you're now seeing 1, 2, 3 or double bottoms where the bottom is actually lower than the first bottom. And that used to not be the case. The second bottom was a little higher, which would show that the stock can't go down anymore. But now Algos push those second bottoms lower, stop us out like they've done here, and then take us higher. So it's very interesting to see that, but it's been happening more and more and more over the last several years. Notice, look, we went just a little bit lower. Watch, we're going to take it higher right now. Interestingly, the Russell 2000 did not break the low. Look at that. The index that has been going down the most and has been losing market cap more than anything over the last year and a half has not been going down as much as the small caps. And what's interestingly is if you look at ARK, which has a lot of Tesla, it just now broke the low. So it'll be very, very interesting to see if we rise right now because markets are way oversold. B, the second bottom is below the first one. And we now have all the sectors aligned with each other. And that's very, 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 very important. Very, very important. Usually once sectors are aligned, they start moving directionally pretty well. Now, before I let you guys go, I want to show you guys something interesting. Today's Wednesday, hot stock, weak stock. I'm going with a sure thing. Well, there's no such thing as a sure thing. But Lamb Weston has been one of the top stocks. If you look at the CSI scan, you will find that Lamb Weston is the fourth strongest stock. I also like Marathon Petroleum. But Lamb Weston, it's consolidating near the high. It made an all-time high a few days ago. Market cooled off, barely moved. I think it's got more upside to go. So I think this will go up to about 90. And if it breaks this consolidation, you could get out. But honestly, I think it'll stay up near the current levels. I like the current levels. So LW to the long side and to the downside, Louisiana Pacific Corporation. They make wood, things out of wood material or kind of like woods type of materials. They're not in demand. Housing market is going down right now. And less demand with builders, less demand with this. Now, it rallied last few days because commodities have been rallying, but it appears to be overbought, and I think it's going to come back down to the base. You may want to wait a little bit because market's a little overdone, but I would consider selling LPX to the downside or buying a put. Now, as I mentioned, the market is, let me just go here. The market is setting itself up for a little upside because I believe, one, earnings are a little too, they've been blasted down with expectations too low. Sentiment has priced in most of the downside, and I think the market's going to rally over the next few days unless a global economy can roil it somehow. The levels you want to watch on the SPY right now, the key levels that you want to watch right now on the SPY is 380 on the SPY, all right? On the Dow, the level that you want to watch right now is about 305 or 3,500, okay? And on the QQQ, the level that you want to watch right now, boy, this market's overdone, is 285-ish. All right, 285 on the QQQ, and keep your eye on the report. It's literally coming out in a few minutes, and I'm hoping the report is better than expected, that will start or kick off a nice juicy rally that we really, really need. Now, folks, it's no secret. We're in a tough economic and market environment, and the daily volatility and uncertainty outlook can be stressful, even for seasoned traders. That's why I've been researching a way to simplify investing, and in doing so, I found five stocks that have never lost during a market crash. Not since the year 2000. That's right. Can you imagine? Not in 2000, not in 2008, not in 2020, and not in the current market cycle. Man, oh man. I called them the ultimate portfolio. Now, I just held a special webinar with trader extraordinaire Jack Carter, where I revealed my 5 stocks, and Jack shared his techniques that makes the ultimate portfolio that much better. Now, click on the link below, watch this presentation, do it right now, and I'll talk to you soon. And remember, we've got this pesky report coming out in about 2 minutes. I'm going to get this video out for you, but anything below 8.7, hopefully below 8.4 is good, and anything below 8.1 is really, really solid, and this one below 5.6. Service is very, very important as well. Let's see what happens to the market, and I'll talk to you guys later. Make sure, follow this channel, subscribe to this channel, like them, and post comments. I'll respond. Bye, guys. Talk to you soon. Have a great, great day.